Okay, let's look at the market today. Great day for Tesla, great day for Bitcoin. Let's update my chart. I'm going to add Bitcoin to this chart. I like to manually update this each day, even though I know I can set it up where it pulls in the data, but when I actually update my chart, like update the current stock price, it leaves an impression with me, and I remember it a lot better than if I just set up a plugin, because it's pretty easy to set up a plugin. You can do in Google Sheets. But let's go through. This is just year-to-date information. So Bitcoin on 1/1. So we're going to update the current price of all these stocks. So let's start with Apple. How did Apple do today? It's not doing that well this year. Apple is one of the worst performing stocks of the big companies. So it's 212.44. That's what it closed at. And the market cap is 3173. Let's see, how did Amazon do today? See, as I type it in, I remember it, or at least I visually see. So Amazon's pretty much flat from the beginning of the year. 2335. Bitcoin, that went up a lot today. So did Master, MSTR. Master is a company that buys Bitcoin, but buys it using leverage. So they issue convertible debt and then buy Bitcoin with that convertible debt. Market cap, 2165. Doing that. 2.2 trillion. It's almost the size of Amazon. Berkshire. Good evening, Twan123 Red. I told all my Apple move to Amazon and Nvidia. That was a good move. Berkshire is down. I noticed that my portfolio is down today quite a bit. I just own one share of Berkshire, just one measly share. CVS is doing the best this year of the large cap stocks. Actually, I can just set it up this way. Okay, I can just copy it. Copy and paste. Yeah, that worked. So instead of typing, I could just copy and paste. Setting up my Excel file. Okay, so CVS, what did it close out today? 66.60. It went down today quite a bit. And what's the market cap? 84.25. So I type it in billions and it automatically populates. So this is the row I need to update. CVS is still up a lot, up 34% for the year. So there's a formula on top. It looks into all the cells in row 7. And whatever is the best, that's what it says, best. And whatever is the worst, which is Target, not Tesla anymore. Target's the worst. So let's look at GLD, gold. There's other stocks you want me to look at, let me know. 309.25. And what's the market cap? 97.99. This is the ETF gold. Obviously, gold is worth a lot more than $97 billion. It's worth trillions of dollars. But this is just tracking the ETF. Google 179.76. Google's up today. It's down for the year. It's still down. Lyft. I'm not sure how Lyft got on this list. We'll update it anyway. How'd you guys do today? Do you have Bitcoin or Tesla? If you do, then you made money today. 6608. Damn. Keep doing that. Meta went down, I believe. XRP 713.57. And it's 1794. Microsoft. $491. And the market cap of Microsoft, 3650. Netflix. I hope you guys got Netflix when it came down in price, because I picked it up in 2022, and it's my best performing stock. It is down today. 547. 546.8. Nvidia, the most popular stock. Of course, that went up today 2.5%. And that has the largest market cap. 3835. Silver. Does anybody buy silver? Not doing as well as gold, but 33.24. What's the market cap? 15.21. Target is the worst performing stock. Of all the companies trading above like 20 billion market cap, this is the worst performing. Look how much it went up today, though. 1.5%. Finally. So that's a good stock if you're looking for a deal, a discount. I think I'm going to put some money at Target. Spiders. This tracks the S&P 500. One of the most popular stocks in the market. $620.45. Let's see the market cap. 603.5. Tesla did great today. It went down a lot on today's Wednesday, on Tuesday. The first half of the year, Tesla struggled big time, but I think the second half it's going to do really well. What do you guys think? Are you buying Tesla? It's a hard stock to get behind because people just hate Elon because he's rich. And when you ask people like, why do you hate Elon? They have it never even makes sense. They're like, oh, he's racist. I'm like, how is he a racist? Once I heard him say, it's just all made up because he's wealthy, he's successful, so people get abolish people. Okay, so the best performing stock is CVS. It's up 34% for the year. And Target, which is a very similar company, is down 29%. Tesla will grow. It doesn't matter if you like him or not. Exactly. People have really short-term memories. So Target is down 29. Tesla is down 20% for the year. Google, Google has Waymo, which that's a huge market. Robotaxis, that's a massive market because it's not just robotaxis, it's also people's cars. People are going to stop buying autonomous vehicles, or at least they're more likely to buy them because if they rode in a Waymo or they rode in one of Tesla's robotaxis, it makes them feel more comfortable about getting it for themselves. A lot of people don't like to buy things if they don't know how the product works. And for a car, you can't just buy it to test it out. It's not like going to a restaurant. A restaurant, you're curious, how is the food? You could just go there. It's not the end of the world if you spend $50 and it wasn't that great of a meal, you just don't go back. With a car, it's hard to test it out unless you want to go through the trouble of going to a dealership. But you have the robotaxis that gives people a peek into how the car is. So what are the stocks today? Do you think? Let's see the big movers for the day. So in terms of, this is top gainers. Okay, Sonnet Biotherapeutics went up 242%, but it's a 3.8 million market cap company. So I just would ignore it. And who would have known that? Greenbrier, the shipping company. I did a video on Greenbrier. 21%. Let's see. Cipher Mining. Sounds like a crypto company. BitDeer. Rigetti Computing. This was a meme stock. It was getting a lot of hype. It was really volatile for a while, but I haven't heard too much from it lately. Verint Systems, not too familiar. And Bio, 5 billion market cap, but not familiar. Hut 8, we know that's a crypto company. Big Bear AI, TeraWolf, Mara. Well, Bitcoin went up a lot today, so of course, mining companies are going to go up as well. CleanSpark, I did a video on CleanSpark before. IonQ, Webull. Webull has been pretty volatile lately, right? Some big movements. Oh, Robinhood did well today. Well, if Webull is up, I'm sure Robinhood is up. Because when crypto moves, then stocks connected to crypto, like Robinhood, because people trade crypto, That went up 6%. Maybe I should add it to my chart. That's a good one to track. You guys should create a similar chart as this. If you want this exact Excel file, just email me and I'll respond back. It's pretty basic formulas. At least the main part is these formulas, the best, worst. That's a bit involved, but if you know Excel, you could probably figure it out. But yeah, just where's my email? Yeah, I'll put my email in the chat. So if you want this Excel file, just email me. I share all my files. So if you want anything, I'm happy to share. So if you want a copy of this Excel, email. So let's see. I got to get Robinhood for on the first day of the year, because all the stocks I'm tracking from day one, 38.54. $38.54. And what did it what's it at now? So it closed at 97.98. Wow. Went up a lot. Up 61%. So that's the best. That's better than Target. I mean, better than CVS. Do you guys own Robinhood? Could have made a lot of money. But the thing is, when do you sell? When I buy a stock, I usually pick a good company, and I don't have to think about selling because they're all long-term holds. So that it makes it easy. But the problem is, if I buy a stock like Robinhood, even though I think it's fine in the long term, I don't consider it a stock that 50 years from now I'll still have it. When I look Apple, Amazon, 50 years from now, I'm pretty confident those companies will still be around. But Robinhood, I'm not that confident. So that's why it's hard to know when to sell. So let's see. I remember when it IPO'd, it was 36 at IPO. Let's go to Simply Wall Street. I think it might be easier to see. The hood. This gives you a lot of information when you look at the past. So it IPO'd, it's hard to tell, probably like $20, most IPOs. And then it shot up real fast, like within a week or two. And the peak was 57, which was the all-time high until just 2 months ago in May. So less than 2 months ago, it finally got back to its all-time high. So if you bought it, I know a lot of people did buy it at this point, because it's hard to buy a stock at IPO because institutions have access right at IPO. But if you're a regular retail trader, you wouldn't have bought it. You would not have the opportunity to buy it until it ran up to like at least 50. And the problem is, I remember when I bought Meta at IPO at 40, and it took a while. because it went down to like 25 after a couple weeks, and it took a while to get back to 40, but then it just kept climbing. So August 2021, so nearly 4 years you had to wait. It's a long 4 years just to get back to where you bought it at. It would have worked out if you held, I mean, not held, waited to buy it, because it traded 723 was a low, but it traded between $8 and $12 for literally 2 years. So anytime you could have bought it down here, you had a lot of opportunity. But if you did buy it down here, the problem is, unless you got it like right here in the beginning of 2024, but if you bought it even in the midpoint, December 2022, so you had to wait a year, and you're still at your buying price. And people get real antsy. So most people would have a hard time holding the stock long term. Like I said, unless you bought it within the past 6 months, you would have just been waiting, a long waiting game. But look how much it shot up. It really shot up recently. It looks like Nvidia, that type of growth. So we're talking about Robinhood. So yeah, Robinhood trading at all-time high. Let's just see what stocks went down today. Okay, 88% Channel Therapeutics. I would ignore it. 9 million market cap. Centene, it's a pretty big company. 17 billion market cap, went down 40%. Let's see of other bigger stocks. Oscar Health. That's been getting a lot of press. A lot of people talk about Oscar Health. But throw out some tickers if you want me to look at any of them. Elevance, 79 billion market cap, down 11.5%. Yeah, a lot of them, even the billion-dollar companies, I'm not too familiar. Circle, I know that's getting a lot of eyes looking at it, and that's what you want when you buy a stock. You want activity. You want liquidity, because not just because, of course, you want stock to go up, but you want to, when you do sell it, you want to have an easy time. You don't want. That's why we don't buy penny stocks, because a lot of them are illiquid. Not many buys and sellers. United Health, down 6%. That's getting crushed this year. Rivian. Why is Rivian down? What a garbage company, that Rivian. Look at this. It started. I remember when I first started trading, it was worth more than like Toyota and Ford. And then it just, see, the problem is, if you short it, unless you shorted it at the peak, because you can't wait years when you short it, you kind of have to do it within at least within 3 months. So November 2021 was the peak at almost 150, pretty much right at IPO. In November 2021, so 6 months after IPO, it's down over 90%. Then it hasn't done much since mid 2022. It's pretty much trading sideways. It had some movements here and there, but then it came back down to the teens, and it really hasn't improved too much. You could have got it for $8.40 at the low point. But yeah, it's a garbage stock. I'll be right back. Drank too much water. That's a relief. Okay. I remember people was crazy about it at the beginning of IPO for Rivian, but I realized Tesla was better car. You know what you got to get your hands on? Um, a Chinese EV company. They're doing really well. Not only there's a lot of demand in China for EVs, a lot more than any other country. I mean, they do have the second largest population, but they have the worst air quality. Well, one of the worst. That's why a lot of people in China have masks on because it's a lot of pollution. Like in the US, you can go outside and breathe the air pretty much anywhere in the US. But in China, in a lot of parts, you can get really sick. Um, so what's the best Chinese electric vehicle brands? I remember Neo. I was eyeing Neo for a little bit. A lot of pollution, a ton. And you got to live with it. I mean, there's not much you can do if you're a citizen. I mean, I guess you could move to a different part, but that's not easy. Neo. I remember Neo was also like the stock just grew so much, but then it got slammed. It was not the same type of trend because Rivian was at IPO and then it just came down. This stock it struggled for a good year and a half and then it really shot up to almost 60. And that's down like what 95%. It's a penny stock. There are a lot of reports that most China EVs are made and parked just to get government money. But I wouldn't be surprised. That's 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 the most difficult thing about investing in a Chinese company is the government. The government has so much control. Like in the US, if the government try to overstep, then you have like a million people picketing and it's chaos. Even if it was like a minor thing, Americans are very sensitive. You can't tell us what to do. Hey, Jin, what's going on? Um, but China, it's a communist country. So let's see what else. CVS, it's down 4.5%. I'm scared. Like every time I try to take a risk, not every time, but a good number of times when I try to take a risk, it doesn't seem to pay off. I bought a lot of Intel, and initially I was up like 20%. I ended up selling at a 30% loss, which is good because if I kept the stock, I would have been down probably like 70%. They were the leader by far in the semiconductor space. In the year 2000, that's how computers were made. You had Intel with the semiconductor chips inside the computer. You had IBM making the computer, the construction of the physical computer, and then you had Microsoft, um, the programs inside the computer. Those were like the three companies that controlled the computer market. And starting in the late 90s, the goal was to get a computer in everyone's home, and it worked. It worked really well. But it's such a cyclical industry, semiconductors. That's why I'm concerned about Nvidia, but I lost out on a lot of upside because semiconductor it's just cyclical. Not every industry is cyclical. Like, that's why Buffett bought Coca-Cola. It's not like a cyclical. It's not like it goes in and out like people drinking cola. It's just an all year round thing. I like to sell out of the money put options for decent stocks that get onto the biggest losers. Yeah, that's a good idea. You sell out of the money put options, and the worst that can happen is you're forced to buy the stock, and you might get at a discount because if a stock is $100 and you sell put options, which Jin is doing, you'll collect the premium. Let's see. And you want to do it on a liquid stock, not a stock that doesn't move, because you wouldn't earn much premium. I've done a few videos on puts. So what's Tesla? Tesla's trading at 316. So if you want to buy Tesla, you can do what Jin does, and you sell put options. So you're selling someone the right to sell you the stock. So you would be forced to buy it if it hits a certain point. So obviously it's 315. When the market's open, you could just buy it for 315, right? Tesla. Just put a market order and you buy it for 315. So you wouldn't pay more than 315. Nobody pay more than 315. It doesn't make sense. You'd want to buy it for less than 315. So maybe you sell a put option at 300. And if it never gets to that level, if it never falls to 300, like say it's flat, which is ideal when you sell options. Then you just collect a premium, so you're making money on the stock. And in the worst case scenario, the stock crashes, and then you're forced to buy it, and you got it at a lower price, because if it's trading at 315 and you're forced to buy it at 300, that's better, right? Would you rather buy the stock at 300 or 315? Of course, 300. And you also collect a premium. You collect that regardless. But I feel like when I try to explain options, people start clicking off the video because you got to really focus. It's not like that's why people like a lot of these other YouTubers, because you can just leave it on in the background or not even pay attention, and it's relaxing. It's kind of like watching one of those TV shows. You can just relax with it in the background. But if I was gonna talk about options, you kind of have to really focus. You can't just relax and not listen, because you gotta. It's not straightforward. But watch a video of mine, and I'm happy to go through put options step by step. I enjoy it. You can always buy to close several days later when the stock bounces back. Right. The thing with options, you don't have to always exercise the options. There's other ways you could extend the option, um, or yeah. So that's the thing. People think, oh, if I buy if I buy or sell an option, then I'm going to have to buy or sell the stock. No, you can put another option on to close out your. Um, I think a good way to think about it is I go on a lot of tangents. If a company has 10 billion of debt, say it's a company with a 50 billion market cap. So 10 billion is a pretty big chunk of their company. If they have 10 billion of debt and it's due at the end of this year, they're not going to pay back the debt. Most companies don't pay back the debt. For example, so 10 billion. So say the interest rate, um, the interest rate is 5%. So how much money are you paying in interest a year on this debt? Well, it rounds $500 million of interest. Let me fix that. So $500 million of interest. Now, if you refinance the debt, you want a lower interest rate. Of course, you can't control interest rates. So if interest rates go up, which is bad, you have to live with it. You have to take on debt at the higher interest rate because you can't afford a $10 billion payment. So now the annual interest went from 500 million to 600 million. So you have to pay 100 million more in interest. But in the ideal scenario, is interest rates go down. So now your annual interest payments are 400 million. That's why the best time to buy a home is when interest rates are their highest, which is the opposite of what you would think. You would think, oh, I can only buy a home when interest rates are really low. But the problem is when interest rates are really low, the price of homes is usually high. And when interest rates are really high, the price of homes is really low. And the reason you buy a home when you have a high interest rate is because you could refinance it when rates go down. You can't refinance it if you get a really low interest rate. What's the probability that the home team will win a Major League Baseball game extends to the bottom of the ninth? Well, what's the probability that the home team will win when a MLB game extends to the bottom of the ninth? I'm not sure. Is this a trick question? Because if you're in the bottom of the ninth and you're the home team, then you're losing at that point. Because if you were ahead, the game would be over. So is that like the trick? Because if it's top of the ninth and you're the home, the away team is batting in the top of the ninth. I don't know. It sounds like a trick question, but it's low, I would say. Wasn't there news about Tesla earnings? I thought I heard about today that yeah they Tesla stock pops if the Q2 vehicle production tops forecasts. Deliveries fall 13% from a year ago. So that's why a higher forecast. That's how stocks move. Stocks move two ways. If they meet expectations, like they meet earnings, that revenue is above. So if the market said this company will have 10 billion of quarterly revenue and they actually report 11 billion, the stock goes up. But if they report 9 billion, the stock goes down, right? But sometimes the stock goes up even if they report worse earnings, because the forecast, if they're forecasting really strong earnings for the rest of the year and next year. But yeah, so Tesla climbed 5% today. 5%, that's a lot for $1 trillion company. Because if you think about it, $1 trillion company, right? $1 trillion. So 10% is 100 billion, right? So 5% is 50 billion. So that's 50 billion of value added in just one day. 50 billion. 5% is 50 billion. Could you imagine? I remember when I started trading, I think the top 10 companies, some of them were around that 50 billion mark. And in just one day, in just one small day amongst the entire year, one company goes up 50 billion. It's kind of crazy. Okay, Tesla said Wednesday it delivered 384,000 EVs in second quarter. Is that its highest ever? 384,000 EV in second quarter, which is less than the 389,000 projected. So it didn't meet the target, which is interesting. That's what it said. They fell short of the target, but the forecast for the future is higher. The company's deliveries for the period marked a 13% drop from a prior year, but an increase in vehicles delivered in the first quarter. Tesla reported production of 410,000 vehicles across its global plants. Second quarter, a jump of 400,000, expected roughly in line. So how does Tesla go up? It's nuts. It's not even that many cars. 384,000 cars. Like, how many cars does Toyota sell in 2024? So in all of 2024, Toyota sold 11 million cars. So for the quarter, so Tesla, 384,000 cars for the quarter, right? This is how many they sold. Toyota, 2.8 million. That's for one quarter. That's why it's so hard to buy Tesla. I don't know how people do it. What's probably yeah, the home team is losing or tied if the game goes to the bottom of the ninth. I asked AI that question and the response was not good. What was the response? Just a quick example of how much crap AI can spout out that is not accurate. They were trying to claim the home team has a significant advantage. That's why, like, AI, it's just like Google search. Like, what is the capital of Arkansas? That makes sense. Like when it's strict facts. But when you ask a question like, is Tesla over or undervalued? Like those types of questions, really nuanced questions, AI, it's not ideal for AI. Okay, let's see. Earlier on Wednesday, shares had risen. Tesla stock is down more than 25% for the year. So yeah, we saw that earlier. Tesla year to date is down 20%. And it's doing, Apple was doing the worst year to date of the big companies, but now Apple's down 14%, Tesla's down 20%. Tesla stock is down by 25%. Has damaged Tesla's reputation, exposed Musk premium in the stock, just as the company. Okay, new data on Tuesday also showed Tesla's sales dropped for the sixth straight month in Sweden and Denmark. Last week's separate data showed sales falling in European regions. Like, look at this chart. Deliveries is what you want to look at. It's kind of like when you're looking at Meta, you want to look at how many people are using the platform. Like Netflix, how many users, how many subscribers. But with Tesla, it's deliveries. I mean, not how many cars are made. That's good information. But how many cars are made are not as relevant as deliveries. Deliveries are real cars that somebody bought. So they peaked. They peaked in, like, the fourth quarter seems to be their best quarter, like most companies. The fourth quarter of 2023 was a peak, and then it looks like the fourth quarter of 2024 was their highest ever. But they're not really growing. Look at the first quarter of 2025. It's lower than the first quarter of 2024. And the first quarter of 2024 is lower than the first quarter of 2023. So they were growing up until 2023, and now they're actually coming down. That's when Amazon was extremely overvalued. It had a 5,000 PE. Remember, in like 2002, 2003. Same thing with Tesla, like 10 years ago, like a 200 price sales ratio. But Amazon kept growing and growing and growing, and it made the PE, it normalized the PE, which is what we were expecting. It grew into it. It justified such a premium. But Tesla's, it's not growing. And unless I'm missing something, unless Tesla is going to be selling something else. And I know the Tesla bulls are going to say it's not a car company, it's a software company, which I think that's much more scalable, the software part of it. If they could build charging stations all over the world, that's a great way. That's a much better business model than cars. Cars are very inefficient, expensive, costly. So, but it's Elon, so people just buy it. Okay, but investor bets on Tesla hinge largely on lofty promises from Elon. He does make big promises. Remember, he was talking about the robotaxi for years and years, saying it's soon. They finally did actually have their first ride. But Waymo has been in the market several years already. They have so many robotaxis already out there in the market. So they took the lead. That's why if you like Tesla because of robotaxi, then just buy Google, because Google is a proven entity, and it's down also. So let's see. Let's go back to the article. Tesla launches robotaxi in Austin on June 23rd. What first appeared to be a successful debut that sent shares up 8% turned out to be somewhat rocky. A day after the launch, the stock fell, as videos showed Tesla robotaxis violating traffic laws and incidents noted by the net. I didn't know about that. That's a big problem. Robotaxis The big concern is that well, I guess people will die in the car, which is a huge concern. But other concerns are, the car won't know when to stop, when to do this, when to do that. Waymo, it's done. They figured it out. It's all tested. It's perfect. But Tesla still needs to refine the process. Musk said he expects to put millions of robotaxis on U.S. roads, but the CEO has a history of making highly ambitious predictions that have not come to fruition. That is true. Meanwhile, on Tuesday, Elon and President Trump, so they have a feud now, Trump and Elon, and that brought the stock down 5%. This is obviously on Tuesday, this article. Trump threatened to cancel subsidies for Musk's businesses, including Tesla and SpaceX, after a series of posts from Musk slamming the president's big, beautiful tax and spending bill. The more Musk's image unravels and his overblown promises get exposed, the more Tesla starts looking like a house of cards built on hype. Yeah, it's gonna fall down. It's not a Ponzi scheme. It's not like Enron. Enron was, or it's not like the .com companies. Those companies didn't make any money. So it's a good company. It's just not a trillion-dollar company. Tesla is still over $1 trillion market cap because the best car company is Toyota, and 224 billion market cap. So it's Toyota is 25% of the size, but they sell. How many more cars do they sell? Where's that chart I had? So look how many more cars they sell. They 7x, 700%, 7 times more cars are sold by Toyota than Tesla. And I know Tesla cars are more expensive, but they're not that much more expensive. It's not like Tesla's cars are 100,000 and Toyota are 10,000. They're comparable. So, but I mean, I was wrong all along because people bought Tesla, made a lot of money. Elon didn't buy Tesla. I mean, sorry, Buffett didn't buy Tesla, and I stand behind Buffett. I don't know. What do you guys think? Do you think Tesla is valued appropriately? Nortel? What did I say? Nortel? Um, but what other news came out today? Any other stories? I like this website a lot, tradingview.com, because I like these the sections that you can choose from, like large cap, small cap, pre-market, most volatile, 52-week low. This gives you a kind of a look into companies that are highly discounted. A lot of healthcare companies on this list, which is interesting. Yeah. Anybody tracking a stock that's at a 52-week low? I thought Target was a good one. Down 29% for the year. Let's see. I think it's like a 4-year low for Target. So they're back down to 100. and you'd have to go back to 2019 before COVID when they were trading at that level. So it's a 6-year low. And they were up to 260 at the end of 2021. So why is Target? And people will say, anytime you ask a question, people will just give you a general response, tariffs. But then you could always debunk, like, okay, if it's tariffs, then what's CVS? What's the difference? Pretty much same thing, and CVS is up 34%. And Amazon's flat. So tariffs should definitely affect those companies. I mean, the market buying Lulu at the moment, that's a good company. I was hoping for a pullback from Lululemon. And it looks like it's kind of like Nvidia. I was waiting for a pullback, and it came, the pullback, but yet I didn't buy it. So at what price is your pullback? The problem is when people say that, they usually won't buy it no matter what. Like it'll go down to 300, 200, 100. They still won't buy it. They're like, okay, if it's going down, it's going to keep going down. So Lulu peaked at over 500, which is crazy, over 500. And then a 50% drop in 8 months. So that's in 2024. It had a 50% drop. So it looks like it's at a good price point. Let's see what Simply Wall Street says. They're at 311. But let's do a DCF. I'll show you guys how I do a DCF. It's a pretty simple process. So the stock is trading at 246. At 246.30. The market cap is 29 billion, so not too big of a company. When you buy a company like Nvidia or Microsoft, just hard to imagine those companies doubling in price. Yannick, thank you. That's really nice of you. Well, we're looking at Lululemon, so let's keep going with it. 1.6 billion. Looks very tempting. So actually it's priced just right, according to the model. It's I'm at 241 and it's trading at 246. That's interesting. Let's look at the analysts. What are the analysts saying? Analysts are at 300. 33 analysts have this at 300. Just blacked out for a minute. Okay. So if you go back, this stock never split. That's why it got up so high. It's bound to split sometime. Let me just confirm that. Ticker Lulu. Oh, it did split. Sorry, in 2011, a 2-for-1 split. So if you invested $10,000 in this company 10 years ago, you'd have $38,000 today. If there's anything on the video that you want, like if you want to know what website this is, you can always email me and I'll respond. Or if you want a copy of my Excel file, copy of my DCF, or a copy of these year to date, you can always email me. I'll put my email in the chat. I can't really. So on the bottom of the screen is my email if you ever want to email me directly. So this is an approach most investors use, Buffett uses. You project the future free cash flows, because any asset you buy, whether it's a home, a business, you project the future cash flows that asset will generate, and then you discount it back to today. And that's all the DCF is. So when you look at the stock historically, it was trading pretty low for a few years. So 2007 it IPO'd. So for the first 2 or 3 years, it didn't really move much. And then it started coming up in 2011, and it kind of peaked in 2013. So even if you got in 2011, and after like 6 years, it wouldn't have moved too much. It started really taking off in 2018. And the peak was recently. A lot of times, a lot of stocks peaked at the end of 2021, which this did at that point in 2021 was the peak. But you'll notice if you look at stocks of good companies, there's resistance levels. So that resistance level of 466, that stayed there from 2021. So a little over 2 years. So the new bottom resistance is about 300 or 280. So it's probably not likely to break through, go much lower than 280. Although now it is. It broke that resistance point. So you'd have to go back to 2020. So 5 years ago, you have to go back to see where it traded at this level. So it's back to 2020 levels. So it could be an opportunity to pick the stock up. So you have to look in 2020. What was the revenue in 2020 compared to today? Because the valuation is identical in both time periods, 2020 and today. So let's see. See, it's a $4 billion revenue in 2020. And today it's 11 billion. And they're priced identical. So it's like if you had a business, right? And somebody wanted to buy your business in 2020. Say your friend offered $100,000 to buy the business. And you said, I'm going to change this B to an M, but it's the same idea. So instead of 3.8 billion, 3.8 million. So just to give you an idea of how crazy this valuation is. So you have a business generating 3.8 million of revenue, and your friend offers you $100,000. Let's do a million because it kind of looks kind of odd. Okay. So you have a business with 3.8 million of revenue, and your friend offers you $1 million. And you say, you know what? I'm not going to sell. I still think there's a lot of upside potential with the company, so I want to grow it more. And 5 years later, it's nearly 11 billion. So and we're going to use, instead of 11 billion, we're going to use 11 million. So your revenue almost tripled, right? And if your friend said, I'm going to still offer you $1 million, you think he's crazy, right? You're like, you're going to offer me only $1 million and my revenue went from 3.8 million to 11 million. You're expecting like 5-6 million for your business. And he's saying, I'm going to still offer you $1 million. That's exactly what's happening with Lululemon. They grew their revenue from 3.8 billion to 11 billion. And the value of the company is identical. So here's 2020 in the beginning, and at the end is 2025. So how is the market efficient when you look at stuff like this? So I can answer that. I mean, there's a few answers. The let me say on this screen. One thing that makes the most sense to me is that $300 is about the right price for this company. And over $400 is paying way too much for the stock. So it belongs at $300 a share. People were just overpaying for it at one point, and now it's getting back to reality where it belongs. It belongs around $200 to $300 a share, not $400 or $500 a share. So, but that's what you have to do. That's your homework. Is do you think it was extremely overvalued here when people were paying over 400, or do you think that was a good value? Because if you think it's a good value, then you should buy the stock because it's come down a lot. It's just something to think about. Lulu is niche. That is true. I like VFC. They own North Face and Timberland. Can you do DCF for VFC? If anybody wants me to do a DCF, you can just ask, or if you donate $5-10, I'll definitely do it. But feel free to ask, especially if it's not as busy, the chat. So 1248, and the market cap is 4.8 billion. So I have the this is how you figure out how many shares there are. You take the market cap divided by the stock price, 385 million shares outstanding. I just have to put 4.8 because it's formatted, and this 4,800 because all the numbers are millions, except stock price. But everything else is in millions. But email me. I could send you this model if you want. Everything's free. You don't have to pay. If you do donate, it's nice of you, but you don't have to. I'm happy to give it to you free. So the free cash flow is expected to grow to 744 million by 2028. So from 400 to 700 to 744. So let's do a similar trend. I think the WACC should be a little higher, because the WACC is the discount rate. It's like the risk. So if you lend money to, say, your parents, and you know your parents both have full-time jobs, they would have a low WACC, a very low risk. But if you lend money to a friend who's in college, she doesn't work, the WACC should be higher. It's a much more risky investment. Zim, yeah, that's a popular one. So I'm at 23, so it looks pretty undervalued. They're trading at 12. I'm at 23. It's a 47% discount. Let's see what Simply Wall Street has. So they're 14, a slight discount. Let's see what the analysts say. Similar. So I'm actually, usually I'm not that much higher, but in this case, quite a bit higher. Was I too, I think I did it right. 0.5, 0.7, 0.7. And maybe I could lower it a little bit. I could lower it 100 million each year. I'm at $20. If I'm conservative, that's what you generally want to do. Zim, 50% dividend. Zim is really popular. The Israeli shipping company. They ship dry bulk cargo, like grain and coal. $16, $2 billion market cap. I remember when they IPO, they were paying like 100% dividend for like a year. Okay. Very volatile. When you invest in a shipping company, the spot price of shipping rates is by far the most influential thing for the stock price. If shipping rates go up, price will go up a lot, and so will their revenue and profits. And if shipping rates go down, so will their stock price. And how do you figure out shipping rates? Well, it's supply and demand of the market. If there's 500 vessels in the market, generally demand's always there. There's never going to be a time when demand just falls off, because companies are always looking to ship from one country to another. So demand is there, it's supply. That's the hard part to figure out. So if there's 500 vessels out there in the market that are shipping products from country to country, and say a lot of these vessels are old, and when a vessel gets really old, it gets scrapped because it's just not efficient to use anymore. It costs a lot of money to maintain it. And if 120% of the vessels in the market get scrapped, and then now that's 400 vessels, now supply is low, a lot lower than it was, and then rates usually go up. But the problem is, when rates go up, what happens? The companies like Zim start buying more vessels because they're making a lot of money. And when that happens, then rates go down because more vessels on the market. It's a very, very, very volatile industry. So let's look at it. They're predicting their future free cash flow to go from 4 billion to 1.5 billion to 690 million. So let's try to keep it conservative. Let's raise the WACC because it's a risky market. So this is a pretty conservative model, and I'm still at $38. So it still seems really undervalued. And this is really, really conservative. I could use their actual shipping rates because they look how much revenue, free cash flow in 2022, 6.5 billion. It's right here on top, 6.5 billion. Even if I take a low point, 900 million right here, even if I use that as my baseline, I'm at $75 a share. Which this is they did in the trailing 12 months, they had $4 billion of free cash flow. I keep saying revenue. I don't know why. This is free cash flow. $4 billion of free cash flow. This is the trailing 12 months. That's real numbers. So let's pretend they maintain that. It's $331 a share. That's why they're paying such a high dividend, because they have so much free cash flow. Simply Wall Street, this doesn't make sense. They're at $13. I wonder why. I don't think they're doing a DCF on this. Look at that discount rate. They're using 16%. That's crazy. 16. Let's raise it to 16. So this is their future free cash flows. They have 217 million in 2026, then 690 million. So the cash flows are pretty low. Only 100 million, 200 million. And you can see they had much higher than that. They had 4 billion. Just recently at 4 billion. Revenue is the blue line. Look at their revenue. 14 billion of revenue. It just seems like a no-brainer, right? People got mad at me on this stock because I was just when I do my DCFs, I just use their actual numbers and project the future based off of the actual, also based off of forecast. And I was at $200-300 a share, and people lost a lot of money, but I would never invest in this type of industry. See, here's the dividend yield. 2023 was 87%. So if you bought the stock at IPO, you got your money back after a year, just in dividends. And then after like 3 years, you got your money back like 4 times. But the dividend came down. But it's just, you wonder why do they pay so much in dividends? Well, what are they going to do with all the money? Either buy vessels or give it back to the shareholders, and the shareholders own the company. So, and they write that in in their legal documents. They write 90% of our cash flow will go back to you as a dividend. They don't have to, but that's legally, if they were a REIT or an MLP, they have to do that. They have to give 90% back as dividends. That's why a lot of REITs pay high dividends, and some of them have negative equity because of that. But it's just a crazy volatile stock. You could have made a lot of money and got lucky, but it's kind of like playing the lottery or slot machines. I think of stocks as a long-term hold, not like a roller coaster ride. But it gets a lot of views, those videos. Well, Goldman is the biggest shareholder. Huh. Who would have thought that, right? I always like to see who holds a stock, because if it's a big investment firm, that should give you a little more comfort. It's only half owned by institutions, but I've seen much lower. They have a lot of employees, a lot more than I thought they would have. 4,900. And it doesn't. It's an Israeli company, but it only trades in Germany and the U.S. it's been around like 80 years, since 1945. But it was a much different company back then. They might talk about it. It's an international cargo shipping company, one of the top 20 global carriers, founded in 1945. It started trading in 2021. But from 1948 to 2004, it traded as Zim Israel Navigation Companies. So I think they did something slightly different than dry bulk cargo. But do you know how to like track shipping rates? I have it in, I have this little like when I used to, in the beginning of videos, I used to have this like paragraph of information, and I would say it while like, and you see like video in the background. So I would just, I'll show you. Okay, it's right here. So I would like sit here and stare at the screen and just read this while the and you just see like vessels shipping on the vessels on the water. So I'd say the supply chain, the supply of ships in the market is highly correlated to the profitability of shipping companies. The cost to maintain a ship is fairly fixed, depending on the age. The revenue each ship receives can vary a lot depending on the number of ships in the entire market. I've said this thing like so many times, but in here, yeah, the Baltic Dry Index. So if you want to track shipping rates, you look at the Baltic Dry Index. Dry for dry bulk cargo. Like oil is not dry shipping. If you ship like grain, that's dry. But this is how you track rates, and when rates get real high, I'll show you. So this is the Baltic Index. Let me go back further. Since 1969, it looks. Look how high rates were in 2008. If you own shipping stocks from like 2005 to 2008, you made a ton of money because they had so much cash flow. And it's similar to 2021. That's when Zim paid 100% dividend, but it was still a lot lower than the 2008 peak. But in 2021, shipping rates got so high, and then that's why Zim paid a massive dividend. So this is a good thing to look at. It did start peaking at the end of 2023. You see rates got up to 3,000, but then it came back down. I mean, it's like oil. If oil gets above $100, then people who own oil stocks are making a lot of money. Also, the oil companies are making a lot of money, but it just gets so expensive. Everything gets so expensive because you have to fill up your car with oil, and everything you buy is connected to oil. Because how does the food get to the supermarket? With oil, either by truck or by railroad, some type of conveyance. So oil is kind of like connected to everything. But actually, I'm working out at 6:45 every Wednesday. So yeah, that's a pretty good stream. We had a pretty good attendance. Thanks, Yannick, for the donation. And I'll try to do another live stream over the weekend, July 4th, on Friday, July 4th. Okay. I'll talk to you later. Thanks.